There are two daily charts that I want to discuss here, and they are the Euro US dollar and the Australian dollar US dollar. We're going into the RBA decision tonight, and that obviously means some potential volatility for the Aussie. But let's look at the Euro US dollar first, and I think this is a very interesting chart of a pair that is not only trading with bearish sentiment and bearish momentum as identified by the consecutive red grab candles as prices close below the 34 EMA wave, but we're also looking at exhaustion at the 34 period EMA on the low, which is the bottom line of the wave, as it is traveling downward in a mark-down phase. So with the phase or market trend heading down at what's known as a 4 to 6 o'clock angle, the assumption would be that prices would exhaust as they approach this area. Now, there are a number of things that are happening in this area, not the least of which is the 34 period on the low, but we have a 20 period simple moving average converging here. We have a 50% Fibonacci retracement from the last major move, the November 22nd high, down to the lows from November 30th, December 1st. So we have this last major move, which was a sell-off, yielding the upside resistance, and one of those resistance levels, of course, is that halfway mark, the 50%. Now, there were a number of other levels, of course, the shallow 23.6, the 38.2, and of course the 50, but why focus on the 50? Well, the bottom line is aggressive swing entries could have been taken at the 23.6 or the 38.2, but the conservative level, the wave level, the 20 period simple, and the 50% Fibonacci retracement gives us three good reasons as to why prices would exhaust here versus at this level or this level. So when you consider there were three levels to look at, maybe even four, if you consider the golden mean and the middle line of the wave, aggressive levels, the wave introduces the first conservative swing short level, and then we might even have a deeper pullback at the 618 combined with the middle line of the wave. But again, that 50% Fibonacci mark has not only the 20 period simple, which is a psychologically relevant technical indicator, most especially on a daily time frame, but also the bottom line of the wave. And again, the wave itself begins this discussion of a conservative correction. Up until that point, we're looking at aggro or aggressive levels. So that's what's happening on the Euro US dollar as we get the follow through today with the stronger dollar, which was also bouncing from its own much deeper wave pullback on the daily time frame. Let's also examine what's going on with the Aussie, the Comdol, the Aussie. Now, you got to consider a few things. When it comes to the Aussie, we're talking about a pair that has a tremendous correlation back to commodities. So you can consider the continuous commodity index, you can consider crude, you got to consider what the equities markets can do to the commodities and the dollar. A stronger dollar did weaken commodities a little bit, very slightly. So you look at the QM that was down ever so slightly today. And you keep in mind that when it comes to the slightly, when you consider what the Dow did today, stronger Dow usually means stronger commodities, okay? So with the Dow having a pretty decent sell-off into the close, okay, which put us down about 19 points, that's pretty much a flat Dow. Up or down about 20 right now when the Dow is trading at 11.3, 11.4, up or down 20 is more or less neutral. Obviously, there's a slightly negative sentiment with a down close, but that's a neutral Dow. Really didn't help commodities at all. If commodities are stronger, the Dow's stronger, the dollar's weaker, that obviously allows the Aussie to gain against the dollar. Not the case really today in any significant way. However, keep in mind that the daily chart of the Aussie is not in an up nor down trend. We're dealing with bullish sentiment, bullish momentum within an overall, what seems to be, according to the angle of the 34 EMA wave, a distribution market phase or market trend. So with that distribution comes a certain acknowledgement that as prices approach the prior highs, the selling resistance that we've seen here before, there could be pressure coming in on the Aussie The RBA, of course, will influence where the Aussie goes from here, but from a charting price-based analysis, the high at 99.53, just shy of that 1.0 parity level, coming in at this exhaustion level that basically is putting a lot of pressure around parity on this pair. Okay, is there a little bit more upside? Of course. Do we have about 200 pips, maybe? Well, maybe not quite that much. Today, we're currently looking at 98. Okay, so about 100 pips or so, maybe a little bit more if we're able to break parity, but about 120, maybe 150 pips of potential upside. But within that 150 pips, I believe, it's my opinion, that we're going to start to see a buildup of selling pressure. Obviously, let's not neglect what a central bank can do, but this is resistance. Technically speaking, this is absolutely resistance, and do not underestimate how much positive comments from the RBA might already be discounted into this market, so the market would have to be shocked to get a significant upside move. I believe a lot of bullishness has already been baked into the cake on this Aussie, and I do feel we're going into technical resistance. We're going into resistance based upon price, and obviously the market phase confirms all that because we would be expecting exhaustion within distribution. Remember, we have transitioned out of the psychology that carried us up higher. The markup psychology, I should say, has transitioned out into more of a sideways market trend, which is why we're looking at exhaustion. We could look at additionally inserting, for example, an indicator like a stochastic. My preference is for a slower 21 period. And again, even the stochastic is implying on maybe a little bit more upside, but this is where we're going to start to see that buildup of selling pressure. So I'd like to see the stochastic over 80. That kind of confirms that we might have a little bit more upside before the selling pressure hammers this thing down, if the distribution range and the fade off the ceiling is going to confirm. So we might have a little bit more upside, but once we hit over 80, we're in overbought territory, and we could at that point start seeing some weakness. And that's what we're setting up on for the daily Aussie US dollar.